Good afternoon. I am Paula Fontana, Vice President of Strategic Programming Initiatives with the National Black MBA Association, and it is my pleasure to welcome you to Capital for Startup Growth, finding it and securing it. So whether you are just getting your startup off the ground or looking to scale, capital is often a limiting factor, especially in our community. And depending on the stage of your startup, there are different funding sources available. So today, we will dig into finding the right investor, as well as the proof points, if you will, that funding sources require before investing in your growth. Speaking of growth, the mission of the National Black MBA Association is to provide educational, wealth building, and growth opportunities for Blacks throughout all stages of their careers as students, professionals, and entrepreneurs. And we can only accomplish a mission such as this in partnership with companies such as our sponsor today, Northwestern Mutual, who provide access to opportunity. I really cannot say enough about Northwestern Mutual. They just get it. So they have been actively engaged in our entire membership pipeline in both year-round and conference programming. Their engagement spans everything from tackling the racial wealth gap alongside our Chicago chapter, as well as providing resources for our entrepreneurs through Scale Up Pitch Challenge. What I love about them is they do not just figuratively throw money at the problem, but instead they are partners in the trenches and are the best partners in the process to get us to solutions. They are committed, invested in our membership and this community. And so again, I thank you on behalf of the National Black MBA Association for all that you do and continue to do in partnership with us. A video, though, can really tell you much better than I can. Take a look.
We are on a mission to help close the racial wealth gap. That's why we're supporting Black entrepreneurs through our Northwestern Mutual Black Founder Accelerator.
I'm Lucretia Cade, founder and CEO of the What If Collective from Atlanta, Georgia. The next great Black entrepreneurs in this Northwestern Mutual Black Founder Accelerator. What I'm really seeing through Northwestern Mutual is the investment of time, of education, of putting your money where your mouth is. I'm honored to be a part of it, and I'm just grateful to Northwestern Mutual and to Generator for having the courage to do this, because we are literally creating Black history.
Thank you for that video. Moiz.
Oh, good afternoon, everyone. Paula, thank you so much for hosting us. It's truly an honor to partner with the National Black MBA Association and both our organizations, as long as my partners at Generator and Gateway. We're just excited to be here today and share a little bit more on the market, share a little bit more on funding and just what we look for. Just a little bit on me. So I'm the Senior Director here of Impact Investing in Northwestern Mutual. I have the honor and privilege to lead a lot of our initiatives around creating greater access to capital and closing the racial wealth gap. A little bit on my firm. So NM has been around for 160 years. It's been through everything. Most recently, we're Fortune 90 now in the insurance and wealth management space, focused kind of on life, disability, and long-term care products. We go to market through financial advisors, so highly skilled, highly personable, highly credentialed folks that can help your family create a financial plan, but also create a legacy. And a big part of that, and a big part of my role here at NM is, as we talk about relieving financial anxiety, a big part of that is also access to capital and being able to fund your business and fund your vision and fund your mission, so to speak. So The way we're approaching this, we saw the video from Lucretia, Paulie did a great job on introing us, but what we're trying to do is create an ecosystem. And, today's panel is here to kind of share that and give a little bit of inside scoop on how we're doing that. But we've created allocations in our venture fund for underrepresented founders through our corporate strategic fund. We've established this impact investing fund to help with affordable housing, but also help with first-time fund managers and fund managers of color. We've created an expansion fund for small businesses to help them kind of grow and scale. And we established the Accelerator program that we just saw that video on that I get to run with my partner in crime here, Precious Drew. But just excited to be here today, share a little bit more on kind of the work that we're doing at NM, but most importantly, just how to access capital, right? And for the audience today, you'll get three perspectives from a strategic investor, a traditional venture capitalist, and an investor and an accelerator, and kind of what we look for and what we look to do. So excited to be here, share my thoughts. But with that, I'm going to hand it over to Precious Drew to share a little bit more on Generator, their investment accelerator programs, and their corporate innovation initiatives.
Thanks, Moiz. Hi, everybody. Precious Drew. I am a solution director here at Generator. I oversee several of our investment accelerators across the country, including our Northwestern Mutual Black Founder Accelerator program. Before I dive into what we do through the Accelerator program, I'd like to share a little bit more about Generator. Generator is a venture capital platform where we connect founders, startups, corporations, musicians, and artists to various resources, including funding resources. We're 11 years old, based out of Wisconsin, right next door to our partners at Northwestern Mutual in Milwaukee. And we've been working around the country for the past 10 plus years now. Looking specifically at our Northwestern Mutual Black Founder Accelerator, we are going on the end of year 2 for the program, so creeping up on 3 years now. We launched this program, murder of George Floyd, a few years ago when it was a recall out to the VC community to say that there is a lack of funding going into Black and Brown founders. That is when ourselves, in collaboration with Northwestern Mutual, joined forces to launch this accelerator specifically for Black founders across fintech, insurtech, digital health, and data analytics. So it's been a very fruitful partnership over the last several years here. We've gone on to have founders raise over $25 million in funding, in addition to the capital we support them with through the program, and we'll continue to do so through the next few years and foreseeable future as well. I'm excited to be here and talk to you all today. National Black MBA Association. Again, thanks for having me. For those of you in the audience, I am an alumni of their high school program, Leaders of Tomorrow. So it's always exciting to give back and be a part of an organization that gave so much to me as a high school student as well. With that, I will pass it along to Dana Guthrie from Gateway Capital.
Thank you so much, Precious. Thank you. And I'm super, super excited to be here as well. I love these conversations, so I'm all for it. My name is Dana Guthrie. I'm the managing partner at a Milwaukee-based venture capital firm called Gateway Capital. We are so privileged to be here with our partners, both Generator and Northwestern Mutual. Northwestern Mutual happens to be a limited partner within my fund. So Gateway Capital, we're an early stage VC fund here. We invest in the pre-seed seed stage startups. Very intentional about that thesis, and that the fact of the matter is most underrepresented founders, especially Black founders, are have a hard time raising kind of that friends and family round. So we intentionally play very early. And our do different is we don't just invest financial capital within the company. We understand the importance and the severity in investing social capital as well. So our goal is to really go in, dive in with the companies, partner with those founders, many of them being first-time founders, and help them take their company from pre-revenue to revenue generating, finding product market fit, understanding sales funnel and timing, all those things that set them up for a later, bigger round. Like I said, we invest early stage. We have a geographical focus within on the state of Wisconsin, as my lead investor is the state of Wisconsin. And we also have an emphasis on low to moderate income communities. So we're about we have about 13.5 million in assets under management, strong institutional support from the likes of the Northwestern Mutuals of the world. To date, our portfolio is made up of about 83% underrepresented founder-led companies. And I'm super excited to be here and jump into this conversation.
Me too. So, family, you see what I'm talking about. They've created a whole ecosystem. You see, they just get it. So, thanks to all three of you for joining this conversation and to provide the variety of perspective. Now, to our viewing audience, I have a list of questions prepared, but I do want to make sure that your voice and as many of your questions are answered as possible. So I encourage you to place them in the chat as you think of them, and we will try to incorporate as many of them as we can along the way. So first question is, like I mentioned, of course, the three of you represent three different funding sources. So can you just explain to us exactly how you are different and then how perhaps you work together?
You want me to start, Paula?
Maybe Precious should start first.
Yeah, Precious, yeah. Go in line.
Yeah, absolutely. I can kick us off here. So with the accelerator model, our funding comes from an external source. In this case, it's being a Northwestern Mutual. And we deploy the capital on behalf of Northwestern Mutual through a venture fund that we have set up. With that being said, not only are we deploying $100,000 to each of the startups we're taking through our programming, we're wrapping around the services that we provide as well through formal 12 weeks where we focus on growth, scaling, connecting to mentors, connecting to additional investors for more capital resources, and then also making sure that they're talking to potential customers, whether those are corporations or direct to customers as well. Again, over a 12-week time period as well. So we're sort of that in between Generator as well as Northwestern Mutual, and then working hand in hand with the 5 founders we put through each of our cohorts twice a year through our Northwestern Mutual Black Founder program as well. And then we ultimately, as I said, try to connect our founders to additional funding resources at the end of the program, such as the Gateway Capitals of the world or the Northwestern Mutual Future Venture firms of the world as well. So we're dealing with startups typically at an earlier stage as well before we feed them to some of the earlier stage VCs and sometimes seed stage venture capital groups as well.
Awesome. I'll jump in next. So I'm kind of that tweener in between Precious and Moiz, right? So if the idea stage goes into the accelerator, they get all of the services that Precious just kind of spoke about, iterate on their idea, speak to a bunch of funders, speak to a bunch of customers, get a bunch of perspective, and they iterate on that idea. By the time that they graduate from that accelerator, oftentimes they have a more solid idea. Sometimes they may have some type of MVP or early prototype. That's typically where the Gateway Capitals of the world comes in. So the company is a little bit further along than just the idea phase, have definitely given some thought around business and revenue model and how does this scale. But maybe not generating a ton of revenue just yet. Maybe either not yet commercialized or very early in commercialization. So Gateway comes in and we try to write, $400,000 to $500,000 checks that give 12 to 18 months of runway to allow that founder to actually commercialize and deploy their offering, begin to understand their sales funnel, begin to kind of understand what's the path of least resistance. Oftentimes the idea that we go to market with is not the idea that we end up with on the back end, but start to find that traction, start to generate some revenue, start to get a clear understanding of sales funnel and pipeline and how to manage that. Once that happens and once you start to hit some of those milestones, we then go and make connections to the next level. So think late seed, early Series A investors who are capable of coming in and writing $1 million, $2 million checks.
Yep, and I can take it from there, Dana. So, and that's a perfect setup, right? From as companies have an idea to kind of validate that idea to a value prop, right, in the accelerator program or with Generator, right, to then ultimately receive kind of, you call it their first institutional check or a check from Dana and the gateway team, and really refine that and then find that product market fit. But then ultimately, they're also finding the right industry to go into. And that industry could be financial services, and that's where Northwestern Mutual comes in. So we're your typical CVC, so a corporate venture fund, very strategic in the investments we make. And we kind of consider ourselves a double bottom line. So the first is how, like, if we're looking at a company, say they come from a referral from Dana, like, how does that company interact with our field force? How does that interact with our home office? And ultimately, how does that interact with our clients? You know, is that creating a new experience? Is that removing friction, right? What is the strategic fit behind that investment, right? So that's kind of like the first stage. Then second, we start to evaluate the team. Like, is this the right management team? Are they going after the right market, right? Are they really ready to scale, right? And that's where NM comes in. So a little bit, we're a $200 million venture fund, strategically focused in fintech, insurtech, digital health, and data analytics. Our check sizes range anywhere from $500K to $5 million, but that $1 million, call it Series A late seed, that seems to be our sweet spot of what.
Okay. Got it. So don't immediately go ask for 5 million. Got it. Okay.
Exactly.
So thank you for setting that up. That definitely does make it a lot clearer. Would love to hear, though, about the approach for funding. So based on the various sources, should the approach for funding be different, or are the eligibility requirements different at each for each of you?
Should we go backwards this time? Should I start?
Go for it.
I have the most requirements.
Oh, yes, yes.
Right. So again, we're a strategic investor, right? So and for where we come in, check size and round size, right, is we like to see a track record, and we like to see that fit, right? And a lot of this is because we're deploying the capital to help this company scale up very fast and get to the next round, right? And a part of that means that we also don't have a lot of the time and resources to help really identify that you know, is this the right customer? Is this the right fit? You know, am I solving this problem the right way, right? And for us, we're trying to deploy that in our own backyard and use that for our clients, use that for our staff. So that's how we start to evaluate this, like more of a, I don't want to use the word vendor, but we start to evaluate, like, how would we do business with this company, right? And if we were to invest in them, how do we co-create with them? How do we collaborate? How do we create a new experience, right? And those are some of the questions that we start to ask at that stage. And I'm just a believer, like, if you're very early in your startup career and with your company, you just don't have those answers yet, right? And that's where the door gets closed, right?
Got it. So if we go to you too early, door gets closed, we don't necessarily know where we should have started.
Exactly.
Okay.
Yes, I'll tap in next. So for us, we're obviously a little bit different than NM. We're much earlier. So at the time that we come in and we're evaluating deals, there's not much of a track record there. If there is, it's a benefit, but oftentimes it isn't. So our investment decision is largely based on what we see the market opportunity to be, like how big can this company actually get, and frankly, do we have the expertise, network, connections to help kind of increase the probability of success for that founder? But secondly, we also look at the founding team. Is really betting on the jockey in the area, in the space that we play in. Being the first institutional investor, a large part of that investment decision goes on, do we believe this founder has the capability or is uniquely positioned to do this thing at this time, right? And frankly, what I see over time is when you're at the earliest stages, the team often isn't quite built out yet. There are always some pieces missing, mainly because at that point you can't afford everyone that you need. And that's okay. That's okay. But what I look for is the founder or the person that's leading this thing aware of what they're missing? And are they seeking that out? And are they getting creative in how they galvanize the people around them that are involved to keep them focused on, attaining the common goal and reaching the vision? So I would say the two key parts of what we do and what we're evaluating this team, size of market and scalability to the company. And then I'm getting really I'm having a lot of conversations with founders around this, around truly understanding the unit economics. Because when you start to drill down into the, creating a revenue model, you may not have proven that out that works, but to have written down certain assumptions around the unit economics and how this company makes money, oftentimes you see what becomes impossible. Like, if it's going to take you tapping on 1 million doors in order to get there, right? That's a little bit harder, right? Than saying, oh, I just need 5 customers and we get there. So really drilling into the business model and the revenue model and kind of understanding that is another thing that we take a look at.
Great.
So some of the areas that Dana mentioned, we're looking at, market at the accelerator stage. At the accelerator stage, is the market there? Is it the right team tackling this problem? It can be a great idea, but is it a team that has expertise or a background in that industry that you're going after to really bring it to the forefront and bring it to market? And then we also like to look at early traction or signs of validation. And that doesn't necessarily need to be revenue, though that is the best sign of validation. It could be a wait list. It could be early customers indicating that, hey, we would love to test this out when you have it ready as well. I think oftentimes people mistake traction revenue, which again, that's a great indicator, but it's not the only indicator. So that's another thing that we're looking at. And then I would also say, because this is an industry agnostic, or excuse me, a stage agnostic accelerator program, we get folks that are, early MVP idea stage, but also folks that may have already generated hundreds of thousands of dollars. Their needs, of course, are different. So one of the final things that we like to look at when we're analyzing which companies to accept in the program is really the connection or use case to Northwestern Mutual as an organization. It's a very unique partnership that we have, and we're able to tap into executive leaders within the organization and really pick their brains throughout the program. We pair each of the founders to an executive mentor throughout the program, and we want to make the most out of that executive mentor. And that's with having a use case for I would say, maybe not even Northwestern Mutual specifically, but more so the insurance industry. So that as you're learning within the accelerator program and you're going after maybe other insurance companies or financial institutions, you have now this real insight from one of the number one institutions such as Northwestern Mutual that you can take along with that as well. So again, if I had to sum it up as far as what are we actually looking for when we're looking at criteria for the program and choosing our final 5, again, it's market, it's team, it's those early signs of validation that you're onto something and this is something that people are willing to pay for. And then it's the alignment with use case organization as well.
Perfect.
And Paula, if I could add too, right? And this is the beauty, right, of why this ecosystem works, especially with the 3 of us, Precious, Dana, and myself, is we're constantly talking about deal flow, companies that we're working with, questions that those founders have, right? And as the founders are asking the questions, whether they're in Dana's portfolio or Precious, like we're real time answering this. So if they're trying to decide, do I go down path A or B, right? It's not like okay, let's kind of weight them and figure it out. Like, let's go to the source, a financial services company. What are they looking for? Is this even a problem that they have right now, right? And be able to get that information. And as that gets back, right, talk about the real-time flywheel of iteration that these companies are getting better and better, right? So as they go from Precious's program, receive follow-on funding from Dana, they've now created something that the market truly wants. And a company like NM would look for from an investment perspective, but also from a potential partnership perspective.
Great. Thank you for that additional perspective. So I mentioned at the very top of the hour for you to put your questions in, and I love that you all are jumping right in. So there are tons of questions in the chat already. The first one I see is asking for a link or a site to all the different funding sources. So I'll ask my production team to make sure that those resource links are available within the chat so that people can readily access them. The next question is from Russell Glover on LinkedIn platform. And his question is, what equity, if any, is required to the program or investors?
Should I jump in? I don't
Sure,
mind.
sure.
I don't mind. So it's totally gonna be dependent on stage as well as how the market is going, right? So, right now, we're in a market where I wouldn't say it's depressed by any means, but there's definitely been a market correction in the recent year where valuations are down from where they were the last 5-7 years. So pre-C stage, which is the stage that we play in, the C stage. You can expect anywhere in the 20-25 market starts to get a little tough. You can start to get higher 20s, but expect somewhere in that 20-25% range, depending on how much traction and what you have to going for the company at that time. And then I'll let Precious and Moiz tell their stages.
Yeah, for the Accelerator program, we actually invest directly into rounds if you're raising with a lead investor. So we follow terms that are set by a lead. If you aren't actively fundraising or have a lead investor, we offer our standard Accelerator 7.5% safe.
Yeah, and at NM, our corporate fund, we're a follow-on fund. So for us, we really lead with the strategic side of that, and hope that the round itself is coming together with the lead investor that either we know that's in network for us, or it's someone that we've worked with prior. We don't have initial targets to say, we must own X% of or have X% of equity in the company. It's more on the fit for us, and does it make sense to bring this company into the portfolio?
Yeah, Moiz, I'm going to piggyback that because I think that's an important part. We don't have targets either. It's set by the market, right? You're normally trying to stay within the national average standards on some of these rounds. So it kind of fluctuates at a time where it was a really founder-friendly market. You could, raise a seed and not give up much of the company at all because everyone was, there was a lot of capital available to everyone. But I think that in the market that we're in right now, things are a little bit, good companies are still going to raise money, that's for certain. But valuations and things have corrected in the last year or so.
Mm-hmm. Yeah.
So there's a question from YouTube, and it is there anything that stands out to you all when evaluating which startups are most qualified for investing?
Yeah, I can start maybe and then hand it over to my colleagues here to fill in. So when we look at a startup, I always start with the team first, right? And is this a group? Is this the right management team solving this problem? Like, do they have the experience? Right? Do they have the network? Do they have the expertise to do that? But at the same time, is this somebody I want to work with? Right? Is this somebody that I want to collaborate with? Are they open to feedback? And together, if Northwestern Mutual, to truly be a value-added investor and provide perspective and guidance, are they going to be receptive to that? And call that management founder makeup construction. So that'd be kind of one. Two, then going into is this a true problem that they're solving? Is this something that we're facing here at Northwestern Mutual? Have we heard this from our financial advisors? Have we heard this from our clients? Have we heard this from our home office employees? Start to validate that problem and that use case within our own system here. And then taking that one step further out into the financial services and insurance space. Is this a common issue? And then from there, then it starts to get into kind of the details of, track record, the business model. Is this a sales? Is there a sales pipeline, and is that sales pipeline being executed and filled? right? We'd hope to see some big names and logos on there that they're either working with or in conversation with, right? And kind of what does that throughput look like from conversation to close? And then I usually close it with like, why NM? Like, why do they want Northwestern Mutual to be investor? Like, does that help them does it open a door for them? Does it give them some credibility in the insurance space? Like, what's the rationale? Because again, if we're a strategic investor, we also want to be partnered with strategic companies. And how do we both work with each other?
That makes sense.
Yeah, I'll echo everything that Moiz said, and then I'll just add. So a lot of times, every investor basically says team, and I believe that that's hard for entrepreneurs to really know how to navigate. And like, what does that mean? How do I know? So team is obviously important, but when I think about the things that stand out, for me, it's speed. So as a startup founder, I cannot express enough the importance of a company having speed and agility, especially at the earliest stages. The market is constantly changing. Competitors are always coming into the space. So you have to have the ability to move quick. So one thing that stands out to me is when I meet founders who are able to digest a lot of information and a lot of input, because as a startup founder, your job is to go out and grab as much information as possible to kind of validate your assumptions and that sort of thing. What separates, in my opinion, great founders from good founders is the ones who can process that, prioritize it, know what's important, and turn it into something actionable quickly. Because that is critically important in growing the business. I've seen really great companies, really good ideas, even strong founders that just take too long to make a decision or to understand what their next move could be. And it actually is completely detrimental to the business. So speed and agility and the ability to process a lot of data and input, advice. Everybody's giving every entrepreneur a ton of advice quickly, and understand what that means as it relates to your business and what's the best move. I'm always impressed by that myself.
So I'm going to stick with something you just said, though. Great versus good founders. So I'd like to know, are all investors created equal? So how important is it for founders to research, let's say, the track record of each of the funding sources before accepting the funds? Or are they all the same?
I would say there are different investors that are right for different founders, depending on what you're looking for at that particular point in time. I think particularly for early stage founders, it's important to have investors that are more than giving you capital, but really helping you make connections, connect with the industry, mentors who are willing to hop on a call with you and talk through different things, problems that you're having as well, and really more so strategic and hands-on. As you become a later stage, again, those things are still important as well, but I think it's specifically very vital at the earliest stages when you really do need that connection. In addition, oftentimes you don't have a team, so you're really leaning heavily on your network as well.
Good. Anyone else to add on that?
Yeah, I'll definitely agree with Precious on that. Not all investors are created equal, and I think it's critically important not just chase the cash, not just chase capital, but actually understand whether or not there's alignment with that particular funder. Because the reality is, running your own company is difficult, and there are going to be times where everything looks bad. It's hard and everything looks bad, and you want the people who funded you and who are on your team riding for you through that storm, versus saying, okay, well, let's shut it down, write it off, soft land it, save it as quickly as we can, right? You want people who truly believe in what you're building, so that when you do get in those downtimes, their first instinct isn't just to give up and be hands off. It's more to lean into, okay, how do we help? How do we pivot? What are we going to do, right? So I do think that it is very important to, as funders are evaluating doing due diligence on investment opportunities, I think that as founders, you have every right to do that exact same thing. Ask for referrals. Ask for, can I speak to someone who's in your portfolio, right? And I think that that gives you a really good insight into the type of investor that you may be dealing with. Because frankly, it's as long as a marriage. This is a 10-year relationship that you're about to sign up for.
Right.
Right. Longer than someone, unfortunately.
If I can add to my mentor always says, being a founder, right, is the most loneliest role and job you'll ever have, right? And then the only thing that kind of keeps a founder going, right, is that truly, like, this is my mission. Like, I want to build this thing and I want to solve this problem and make it profitable for myself, right? But that's one. And maybe they'll find a co-founder, maybe two, that are really championing that, right? And good, between a good and a great investor, right? I think the good ones, obviously, we're all going to be there when everything's going great. We're raising capital, we're closing deals, everything's growing. But the great ones are there when things are going really, really bad. And a good example of that was like when Silicon Valley Bank and Signature Bank and all that happened, what was that, in Q1-ish, Q1, Q2-ish. I think that really showed who the great investors were, right? And it showed, and not because, here's lines of credit and here's additional capital so you can make payroll or whatever it may be, right? But it was the information sharing, right? Hey, I'm an investor. I just heard this happened. This is what I think you should do, right? And just being able to support the founders in a time like that, when it was like, wow, all our accounts and lines of credit are with Silicon. Like, I don't know what I'm supposed to do as a founder, right? And that's what being a true value-added investor is showing up in a time like that.
Right, and it really sounds like it's really about partnership, right? That support after the funding is received.
Yep, exactly.
So we had a question from Brandon. Do you require any assets for funding? Property, vehicles, accounts, receivables, etc.?
No, from Accelerator.
So on the NM side, we're oh, go ahead, Precious. Sorry.
Oh, I was just saying, no, it's not a necessity for the Accelerator.
Yeah, and for us at NM too, like we're a tech investor, so we don't necessarily invest in any hardwares or anything like that. So it's not a requirement from us either.
Likewise here, no, it sounds like the question was more coming from the angle of, do we do debt-based investments where you have they have to put down collateral, right? I think everyone on this call are all equity-based investors for the most part.
Great. So we have a question from YouTube, from Chasten, who thanks you, first of all, for your time. Any advice or best practices for those in the beginning idea stage, the ideation stage?
See, Precious.
That's a great answer, Dana. Find accelerators. Honestly, that's what we're here for, whether it's, the Northwestern Mutual Black Founder Accelerator or the 30 plus other accelerators we have under the Generator umbrella. We're always looking to talk with founders, especially at the idea stage. We also have programming for folks who are generally at the idea stage, and you have no revenue and you're just wanting to toss around different ideas and see if it's a valid business opportunity. We host office hours. You can find it at generator.com, where you can literally just find a time you're available to talk with any of our directors across the country to talk to you a little bit about it. But overall, I would say seek folks who are doing this work every day, whether it's an accelerator, your local business hubs, your local co-working spaces. Talk to people about the idea. And, you never know what resources people are able to share, what insights will help you move to the next step or connect to the right resource as well. So talk is the big thing about it. And again, Accelerator program is a great way to make it to really finalizing a startup and getting it off the ground.
Great. So also from YouTube, we have a question from Jordan. As a financial advisor, is there a conflict of interest if we're seeking capital for a project?
No, I'm assuming that's towards me at NM here. There isn't. It's a case by case type of evaluation from us here at NM. So if they're building a financial tool that services the financial advisor market or the fintech or financial services market, it's something we'd be interested in taking a look at.
Great. So a question from LinkedIn from Elaine. Given the constraints on exit valuations and the partnering shifts happening with dry powder available, are you open to investment rounds with PE-backed ventures?
That's probably more Moiz as well,
Yeah,
because that
I
would be
mean,
past both.
yeah. Again, I come back to the strategic side of that business, and regardless of the valuations and call it if you're looking at this business, right, depending on who the investors are, the valuations of the business, for us it's where does this fit in our strategic roadmap? And as we look at the portfolio of companies that we're building and we're investing in, right, how do they all work together? And that's how I would evaluate a company like that.
Good question. So we talked about sort of what the best case is. A question that came from YouTube was, I was also wondering if you all notice any common mistakes for startups that lead to a rejection of a proposal.
Yeah, I think not researching the investor before you get in front of them, so not quite understanding whether or not you fit within their thesis.
Mm-hmm.
So, for example, I said that our average check size is, a $500,000 check, but if I have someone that comes and they're requesting $1 million check from Gateway, that's something obviously that we wouldn't be able to do. So just a lack of knowledge on the investment theses of who you're presenting to. So make sure there's alignment between that funder's thesis and your ask. And I even told my existing portfolio this when they go to their next round of raise. The quickest way to get a no is to have an ask that is just easily outside the box, and it's like, oh, I don't even have to think about this. I can't do it, right? So being very thoughtful about the ask and approaching the investors that fit that.
Hey, going off of that, similar to what Dana said, the Northwestern Mutual Black Founder Accelerator is mandated to invest in specific industries, fintech, insurtech, digital health, and those who also run the realm of data analytics as well. So we're looking for companies within those criteria. Of course, we're happy to point you to other resources that are more relevant, but if you're looking to particularly get into this accelerator program, that's one thing that we're scanning for first and foremost. And the second thing I'll just add, because I see this earlier on, especially at the idea stage, asking investors to sign NDAs. We look at a lot of deals in a year. Let me know the investor that is willing to sign an NDA, especially at a first discussion. I would love to chat with them. But that's just something that's not common practice across the industry. So also being aware of that and, not sharing, things that you deem is super secretive information that you wouldn't want, someone to go and duplicate as well. So just being mindful of the information you're sharing and then the requests that you're asking for, folks who are seeing, again, upwards of thousands of deals a year.
Got it.
Yeah, and I'll add from the strategic side, and this one always gets me, but corporate venture capital, like firms, we all know each other at different firms, and venture in general is a team sport. It's very collaborative. Once two funds understand each other's mandates, we try to shift and send deals each other's way. So founders sometimes will tell one fund a story and then go and tell another fund a story. But then when we do our diligence calls when both VCs do the diligence calls, the stories don't match, right? And I don't get that play, but I'm just going to call it out for everyone listening today, right? That VC is a collaborative, it's a team sport. We all work together. We're all talking constantly about the deals that are available and the startups that are out there, especially from a strategic side. From and then we're our scope is even smaller So that means the pool of startups are even smaller. So they're all kind of we're all talking about the same companies. So we kind of know what's truly happening and what's not.
So I know earlier you talked about, when you were talking about what was important, you mentioned the importance of, what does that team look like? So we have a question from Jeffrey Turner from LinkedIn, and that was, does any panelist invest with smaller startups such as solopreneurs or smaller LLCs less than 10 employees?
Absolutely. The Accelerator, we have invested in several solopreneurs and have helped connect them to various resources they need to build and scale their companies as well. That's part of the benefit of an accelerator, is connecting with additional personnel as well. So again, at the earliest stages, we're investing. So solopreneurs and those who are, again, earlier on the idea side, but have maybe a lot of industry expertise, we'd love to talk to them and potentially get them through the accelerator program.
Great. Thank you.
Likewise at Gateway as well. We the bulk of our portfolio, we're either solopreneurs or a team of two. They've obviously grown since investment, but we will invest. I think the more critical piece of that, we are talking a lot about team, and that is important. It's still important for you as a solopreneur to understand what your team should look like. If you had all of the necessary research, who are the people that you need us to connect you with? So if it's a non-technical founder starting a software company, I'm helping you understand who are some of the local technologists in the ecosystem that maybe you can get on board, that sort of thing. So it's not that you necessarily have to have the exact right team at the earliest stages, but it's knowing what you don't have and how are we going to get creative about getting some time from somebody to help us with that. Right. And who are the people that we need to get after? And I think a lot of times founders immediately go to, I need to get a list of like star advisors. And don't get me wrong. I love advisors. We all need advisors. I have my own set of advisors. So that's necessary. But I think that more time should be spent on what does the team need to look like in order for us to get where we're going. Because you as a solopreneur, you can only run the ball so far, and so you got to know how you surround yourself with the right folks to help in the day to day. Not obviously you want the people picking up the calls for advice, but actually operationally, where are you? And that goes in leadership, just basic leadership of the business, right? If you don't enjoy sales, that's a large part of a startup. You better get yourself find somebody who does, right?
Exactly. So when we talk about funding, sometimes we hear a lot about what is not available. But could we talk a little bit about the funds that are available at this time? What should our member founders be doing? How should they navigate this market right now?
So this is I'll start it off. Maybe we can there's kind of two questions here, right? It's like navigating today's market, right? And what can we do to actually secure funding? And right, to call it what you want, right? We're in this weird VC, I've heard the what was it? VC winter happening, was something I just read about. And I call it interest rates and market corrections, public market IPO kind of stopping, whatever it may be. And it's, the shift has kind of gone back on the VCs now with a little more time to do diligence and reference calls and understand the deals that are being presented, versus the market that we had a couple of years ago where things were very fast. Capital is being deployed, within days. Now it's taking months. But I think that also gives the founders time to really evaluate, right? A lot of things that we're talking about today, like, do you have the right team in place? And if you do have a staff of 10 during this difficult market, are those the right 10 folks that should be on the team right now? And do we need to start scaling back, right? And evaluate the roadmap. Are these the right items that we're raising capital to do, right? It's usually you're raising capital to either bring on somebody or execute a roadmap or whatever, or close the sales pipeline. Right. And it's kind of reprioritizing and like racking and stacking priorities for the company itself. And then the last piece on this as prep for fundraising is to really understand, like, so coming to Northwestern Mutual, right? What is NM itself looking to solve in today's market, right? And today, for all the folks listening on, kind of heard a little bit about some of the financial anxiety. How do we create greater access to capital? How do we service our clients? How do we provide tools and tech for our advisors, right? So start to pick some of those and then start to craft the narrative to meet those. And that's what really opens the door to have some of the fundraising conversations, especially with a strategic like NM.
Yeah, I'll just add to everything that Moiz said, and I'll just say, like, stay ready so you don't have to get ready. So I have so many founders who come to me and they're like, "Oh, Dana, no, maybe we don't fit in your investment theses, but can you make intros?" I'm like, happy to. Do you have a canned email that I can share to give someone a quick understanding of who you are when I make the intro? Do you have a quick one pager available just in case that person comes back and says, "Hey, Dan, can you send me, this actually looks interesting. That paragraph I read looks interesting. Before you make the intro, can you give me a little bit more information?" And I can immediately send over like a quick one pager. The pitch is usually visual and not a lot of content and words. So it's hard for someone to fully get a grasp of what the company is with just the pitch deck. So making sure that you have your collateral and that you're making it easy for people to plug you when it makes sense. So like that would be my suggestion in the time right now. And then as far as the market, I truly don't believe that this is a bad thing. I think it's like, what is it, hyperbole, where it's like, so it's a little bit exaggerated on where we are. I think that this is just a correction. For the last however many years you've had, large, well-known venture capital firms not doing any diligence, just wanting to be able to be in the deal because that's the market that we were in. That is not normal. And that couldn't have been expected to be sustained. The sad part about it, and this is a safe space, so I'll say it, is after George Floyd, I think that a lot of, funds stood up and capital went into it. And, you were seeing Black founders getting super high valuations, maybe ahead of where the traction actually was at that time. And now we're in this space where you're having to take down rounds and and everyone's going to say, well, is it because the thesis is that they invest in Black founders? No, it was just that's, the market has taken a hit. But I think that this is not a bad thing. I think that founders have to educate themselves on being realistic about the traction and where you are in valuation. It's not always good to go for the higher valuation. You have to see how you can hit the milestones to warrant that for the next investor. And if you can't, then you're just delaying the inevitable anyway. So that's a whole another 1 hour conversation to dig into that. But yes.
The last thing I'll add real quick here is founders, it's important to understand what your capital needs actually are. For example, what's the minimum amount you need to really make it to the next key milestones? Oftentimes I see founders that are trying to fundraise too much at the wrong time, given where they're at traction wise. So really understanding that. And then as Dana touched on the collateral piece, we focus on also creating an executive summary. So a 2-page document that really goes over different key aspects of your business, whether it's team, business, summary of the business, who are your competitors, who are your comparables. And that's something that investor will look at. Oftentimes investors aren't 20, 30 minutes looking at a startup, especially when it's an initial inquiry. So think about if an investor had 2 minutes to view your documents, how do you put it together in a concise way? And I think an executive summary is a great way to do that.
Mm-hmm.
That's great. So I'm going to say we have 5 minutes left. I can't believe this hour has gone by so fast. So let's see how many questions we can get in that short period of time. So a question came in from LinkedIn from Latiz Ball. Pertaining to startup when aiming to solve the teen homelessness problem, from an investor perspective, is this deemed more risky or not as attractive for investors?
I think that it'll come down to what the solution actually is. Is it tech enabled, or what does it actually look like? Tech enablement typically is more attractive to investors, at least in our spaces. But I wouldn't write it off as not being attractive, but would need more detail to really suss that out, I would say.
Great, got it. So I heard a lot of Northwestern sort of rallying around this 4% of funding. Could you all tell me what is the burning platform? What is that?
Well, let me start, because that was kind of the initial burning platform for us, right? So post COVID, post George Floyd, we created this Sustained Action for Racial Equity program. We call it the SARE Task Force, right? And one of the initiatives out of that is creating greater access to capital. And at the time, this was 3 years ago, we were rallied around 4% being the amount of capital being deployed to underrepresented founders. It's a number you can find online, so I'm not going to go into details on that because time is short. But recently, TechCrunch and a few others and PitchBook have released the funding numbers for this year, and unfortunately, they've gone the other way. It's down to about 2% now. And I just read some in Q3, Black founders were less than 1%. It was like 0.12 or 13% of capital went 0.13% went to Black founders. So, right, I don't know what happened, right? We had all this great momentum and it went down. And, we blame the market, blame whatever it may be, but we have to show up. And I hope that this panel and the conversation we're having today with all four of us shows that we're trying, as from Northwestern Mutual's perspective, working right with National Black MBA Association, Gateway, and with Generator to create this system to help folks raise capital, right, and open doors and find a pathway to take their idea to a business, to a venture backable business, and ultimately to a profitability, to an IPO. That is the plan and that is the goal. But yeah, I would call for my VC fellows and friends that are listening on, right? We have to rally together and continue to stay true to our mission and remove the biases from today's funding sources.
So last question, what should founders be doing right now in Q4 to prepare for 2024?
We kind of talked through this with the market question that came before, but time is on their side now to really just evaluate, rack and stack the priorities on the company, right? Identify that true number, like Precious said, that you want to raise, right? Think through kind of the team construction and makeup, like Dana was talking about, right? And put all that together in a narrative and have these documents ready to go and pitches and everything to hit the ground running. It's like New Year's resolutions, like get them written down. Once that ball drops, like you're ready to go to start activating them, right? And Dana, you said it so beautifully, right? But what, stay ready, be ready? Right? That's the motto.
Tell them again, Dana.
Oh, stay ready. You don't have to get ready.
Anyone else? What should they be doing right now?
Yeah, I would say, a lot of times we focus a lot on funding and investment and that sort of thing, and people don't realize the time that it takes to actually raise funds. You're not 100% operating the business when you're raising funds. So in a time like now, I would say turn your attention to your customers, listen to them, because revenue is the best income, right? Like that's even better than an injection of capital from Gateway Capital. So maintaining the focus and understanding that yes, you do need to raise funds, but also being hyper focused on your customers, listening to what are their problems, ensuring that you have an offering that's actually solving those problems and that they're willing to pay for. So I would say look inward, look at your customers, that sort of thing.
The last thing I'll say is seek help. Again, it's a lonely journey, especially in the early stages when you're a solo founder. And once again, accelerator programs such as Generator are here to help. So visit generator.com, reach out to us. We're happy to talk and connect you to the right resources and right programs, or just be a sounding board. We'd love to be that for you.
That's great. Thank you all for your advice, as well as for this incredible panel discussion. Thank you, Northwestern Mutual, for your continued partnership, and thank you all for your time and attention. You will see that the links that you all asked for have been provided, where you can access and contact all of our panelists. But then also there is a link to a survey. Please fill it out. We would love to hear from you and know if this is the type of programming that you would like to see more of. The first 25 people who enter and complete that survey will be entered in a chance to win an Amazon gift card. So do not delay. Until next time, please take care of yourself and each other. Have a wonderful rest of your day.